Hey everyone, welcome in to another daily editorial here on the KE Report. We're focusing on the precious metals continued breakout, probably even talk a little bit about some of the higher volumes we're seeing in some of the stocks and some of the follow through broadly for precious metals investors that need to be encouraged by this now just over 1 month move. We are chatting with Craig Hemke, founder and editor of TFMetalsReport.com. Craig, as we chatted last week, gold and silver were breaking out and closing the month and the quarter, pretty much everything at all-time highs. We are seeing follow through as we started April here, just about 4 trading days in, not even 4 full trading days in. Silver started to really play catch up, breaking above 26. Gold continued to move higher. Craig, what are your thoughts on just how we're starting Q2 of this year that seems to be drawing more investors into the precious metals breakouts?
Well, hi guys. Yeah, it has certainly been a fun, really, last 5 weeks or so. You're correct, Corey. I think a lot of this week is a function of how we ended last week with what I called a superfecta, where we had a new all-time daily high, a new all-time weekly high, but we're also finishing the month last Thursday, and we're also finishing the quarter. All 4 of those at all-time highs, which is rather eye-popping. And I recall, I think we might have talked about it last week. The only other time I've seen that happen was at the end of the year, December 31st of 2010. And what it does is it gets a lot of attention, not for, the 3 of us and, everybody that listens to us is like, yeah, okay, great. But for the people that don't normally trade gold, right? Or think it only want an exposure to it when it's going up and breaking out. Well, that kind of news and headline and chart gets the attention of the big money traders, the hedge funds, the home offices, the institutions, the folks that actually buy in bulk the futures contracts that drive up price on the COMEX. And that's what we've seen. We've seen a lot of short covering in gold this week as well. And we've had this, just extension of the rally. And then, eventually, remember we've talked about this, I just don't see a 100-to-1 gold silver ratio. So if gold's going to 2,300, which is what we've always talked about as the first target on the breakout, I don't think silver is going to stay at 23. And eventually, I don't even know how to describe it. It's like by osmosis. There's some of that demand kind of wakes up and goes, oh, wait a second, why is silver still down here? That might be kind of a value play. And then boom, silver's got up 234 in just the last 5 days. The only thing I would caution people on is, it's kind of intoxicating and it's great fun. I see gold going up $25 a day. And like I said, silver goes up 234 in 5 days. And it's fun to think, well, it should do that again tomorrow. And maybe the day after that. That's not how this pricing scheme works. There will always be ebbs and flows. Bull markets, as I've 15 years of doing this, is always 2 steps forward and 1 step back. You exhaust all the buying, then all of a sudden the hot money goes, well, maybe there's a chance to lock in some gains before price falls, and that causes price to fall, and so you get this pullback. So if one, I just want everybody, the first time we have a down day, it doesn't mean gold's going back to 1800. But the second thing is, whatever metaphor you want to use, the train leaving the station, the horses out of the barn, whatever, that's not the case. If you believe and you understand what's going on here, you're going to get another opportunity to average in or take positions for the first time. And it's a good thing in the long run.
Well, Craig, let's dig into that point a little bit more, because we already have had a chorus of voices coming out thinking, oh, man, I missed it. Or, oh, wow, silver is rocketing higher. Look at the silver stocks yesterday up double digits, some of them up 20, 30%. Maybe I've missed it. But we should circle back to the longer term charts and point out that, silver in the past has made it up to $49, almost $50 twice, and we're nowhere close to that. And it's the only metal, silver, that hasn't surpassed its 1980s highs. All the other metals and all the other commodities have. So we've been watching just to see if 26 or 2650 resistance would break. It finally did break it decisively yesterday up to 27, but there's a lot of room to run between here and next resistance at 28 and 30, and then after that the $30 to $50 range. So maybe paint the picture for people of where this could develop over time and not to get too trigger happy.
Well, for those people listening that don't listen to us every week, first of all, shame on you for crying out loud. This is the best segment on the KE report all week. But we discussed this a couple of weeks ago when people were really frustrated with silver, had rallied, but not really broken out. And why wasn't it keeping up with gold? Well, because gold had broken out. Gold had been in a trading range between roughly 1,700 and 2,000 for 3.5 years. And then it broke out and everybody saw it. And at the close on Friday, March the 1st, it was a new monthly high, an all weekly high, and 2,097 or 82 or whatever it was. And then boom, it shot higher $100 the next week because everybody saw the breakout. Well, silver still hasn't even accomplished that yet. Silver's been in a range between roughly 22 and 28 for 3.5 years. It hadn't even been able to post a weekly close north of 26 since March of last year. So it really needs, March of 2022. So it's been 2 years that it hasn't closed above 26. So if people think that, the move has been missed or that, silver's not going any higher, well, yeah, it may trade sideways and pull back, at these levels. But when it breaks out, like gold did, above this trading range, puts on a weekly and a monthly close north of 28, then it's just a hop and a skip to a 3 handle. And if you think there's been a rush to get long silver over just the last couple of days with price getting above 26, where do you see it trade with a 3 handle again? I mean, I've seen it happen before. I ought to remind everybody, back in those heady days of 2011, silver began the year at 18 and went to 48 in 4 months. So, people that might have thought, well, gosh, it's moved up to 25. I'm done with silver. Anyway, there's still a lot of room to go, I guess, is the moral of the story.
Craig, what about this broad environment here where, yes, gold broke out and continued to move higher. Silver is at least moving higher, threatening to break out. Copper has started moving higher. Oil has been moving higher. It's almost across the board. Commodities are doing a lot better in the face of U.S. markets kind of flatlining. It's not like we've seen major crashes or corrections anywhere else. So is this just seemingly money on the sidelines or money that's rotated in maybe from the bond market since yields have gone up so much higher that's just finding these sectors that hadn't run to the same degree that all these other sectors had and now it's catch-up time?
Yeah, you touch on it's a multifaceted answer, Corey, and you touched on several of them. I'd throw in, look at all these commodities going up with the dollar's been going up. Dollar's up, 3% year to date, the dollar index? And yet, like you said, crude's gone from 68 to 85 over the last few months, and copper's now back above 420, which is a very important technical level. And actually, that's something people should watch out for because when silver really got going a couple of weeks ago, it went up like 83 cents a day. It was because copper had soared that day. Copper dragged it higher. And copper might be helping silver today as we speak. So keep an eye on copper because if all of a sudden, you get to what some of these commodity guys have been talking about, copper getting to 450 and, back up to the all-time highs near 480, that kind of thing, that's going to drag silver too. So anyway, back to your question, you got is it projecting a weaker dollar in the future? Is it projecting global economic strength? This no landing crowd kind of thing. That's a difficult question. The other part that you mentioned, I guess we have to factor that in too. This CRB index versus the S&P, and any other ways you want to measure commodities versus equities and how undervalued they are on any historical measure, a rotation of assets, that kind of thing. All I did was work all the way back to where we started this answer, Corey. It's a multifaceted thing. And the main thing is, though, just to see that it's happening and, use that information to your advantage. And if you think that this is this is all going to continue, then it's a buy the dip sort of market.
Well, and Craig, if it is, in fact, the economic expansion, as some people in the economy are suggesting that maybe things are better than people were expecting, we are not going to see that recession, that could be pretty good for the whole commodity sector because there's more than going on than just the United States. There's a global picture here. And a lot of people are pointing to India possibly being behind some of the silver buying just because as gold prices ratchet higher, a lot of people, and this is just a global phenomenon, a lot of people will shift from gold to silver. So that could have been helping silver along with copper, along with just the higher gold prices. So all of that factoring in, do you think there's any other economic macro news that we should be looking at that could propel these higher, or does it not matter? Just the fact that it's happening is what matters.
I'm kind of in the latter camp. I see every day, analysis from mainstream commentators. Why is gold going up? And they all can't figure it out. Sometimes it's going up just because it's going up. And it sounds kind of silly. But like I said, you get this breakout on the longer term charts. And people see that, people with deep pockets, and they think, oh, well, this is clearly part of a trend. And then it becomes kind of a self-fulfilling, a virtuous cycle of higher highs. And again, that's not, look, you can say that about NVIDIA and MicroStrategy, and individual equities and the S&P and the NASDAQ and that kind of thing too. And so it doesn't necessarily have to be, well, gold's only going up because it's sensing world doom, and people heading to their bunkers. I remember reading that on CNBC a couple of weeks ago. It can be just as simple that it's a momentum trade for now. And that certainly seems to be what's happening. Now, I don't think it's solely a momentum trade. There was analysis again today. I call it analysis, but from somebody at Bloomberg that said, yeah, I still don't understand, with where real rates are, that has always been the key driver. And we've talked about it here in the past. The key correlation for gold. With where real rates are, gold should be $1,200. Well, that correlation broke about 2 years ago. You know what else started 2 years ago? Massive central bank gold demand. Record central bank gold bet, going back to 1968. 2 years in a row of that. And so that's a big part of the picture too. If physical metal is in kind of short supply, that precludes price going down. So there's a number of different factors that are playing into this. And you know what? That's probably a good thing, because if everybody was on the same side of the boat talking about how great it is, we probably know which direction it would head from there,
So then, Craig, what about looking down at some of the stocks here? The majors have gotten buys. We've seen higher volumes come in. We've even heard about some inflows into the precious metals ETF. So a little bit more Western demand. What are you watching in terms of some of the ETF data? Anything else within the underlying data that shows more Western demand coming in that would correlate more to the underlying equities?
Well, there's a couple of things. One, the long-term trend is maybe not the right word for it, but the way it usually goes when gold's in a bull market and somebody wants exposure, they call up their broker and they say, hey, let's buy a gold miner. And the broker doesn't know gold mining from a car dealership. And so they look in their credenza and they find somebody from their firm that cranked out a report on Newmont or something. And they'll say, oh, my firm likes Newmont. And so it starts with the big producers. And then as things continue, people diversify and start looking at the juniors. And then as it continues, it's like, well, all of a sudden this land they've got staked might be economical to start developing. And so all of a sudden the explorers start to go up. And that's typical. That's how it usually works. Another thing that's little known that we've talked about here for years, the three of us, is the clear correlation between the price of silver and the GDX, which again, so if you think the mining shares have, left the building and it's too late, wait till you see silver break out into the 30s. Then the shares are really going to take off by virtue of the machines buying the ETF and forcing it higher. So that's another part of that. And the last thing I'd say, we're now first week of April. That means that by the end of this month and the first week of May, we're going to start getting production results, and some guidance and things like that. And then a little deeper into May, you're going to start getting earnings reports. Now, I thought we'd have a pretty good January in the shares because we'd had such a tremendous rally in gold in the fourth quarter last year. Remember, we were like 1820 in gold at the beginning of October, and we finished the year at 2050. And I thought, wow, they're going to have some great results in January. And when we all know what happened in January, gold went down and the shares so many of them just got epically smashed. So with that as a caveat and an addendum to what I'm going to say next, you would sure think, given the price of gold going up another 7 or 8% in the first quarter, you'd think those results that are pending for later this month and early May, you'd think those would be pretty good too. So again, I guess I'll wrap this all the way back around in terms of the shares. The big ones moving first, the juniors, that kind of stuff too. And if you believe that silver's going higher and gold's at least going to stay here or drift higher, then you still got a chance to buy some shares before all these earnings hit.
Yeah, Craig, and if a lot of the generalist investors and funds just started paying attention because of the superfecta, because of seeing the breakout on the monthly and the quarterly, They probably haven't even started looking at the gold stocks yet. So maybe we've timed it out well where they're going to be looking as their margins have expanded and as they're actually showing the markets they're making money, making a lot more money than a lot of other sectors, I'd point out. But just as we wrap up here, I think it's important to also look at what could move the needle with the Fed. And you have mentioned a couple of times that the coming jobs report could be important because Powell's put a lot of importance on the labor markets. Break down what you're looking at there for us.
Yeah, this will be something for everybody to watch tomorrow. And again, could weaken the metals into the weekly close. I mean, we're up quite a bit this week, so I can't imagine we're going to fully reverse, and paint some ugly weekly candle, but you never know. But tomorrow, 8:30 Eastern, is your next job report for March. And it'll be very curious to watch because we rallied on the February report, the first Friday of March, because the unemployment rate ticked up from like 3.7 to 3.9. Not so much the bulk number, which we all think is kind of phony baloney anyway, keeps getting revised lower. But that unemployment rate is something that, for whatever reason, gets paid attention to. All right, so during his press conference after the FOMC 2 weeks ago, and then again in an interview with Bloomberg 3 days later, Powell stated very clearly that he is watching the labor market closely. And if he sees any kind of weakness in the labor market, he will cut rates and put the inflation fight on hold. And he mentioned this again yesterday in that speech at Stanford. He was talking about, if we wait too long, there could be some real damage. So he's using that, and those are his own words, to try to preemptively hold off any damage. So that means if, whatever they report, 200,000 new jobs in March. But if that unemployment rate ticks up again, maybe it goes up 2 ticks to 4.1, the metals are going to soar tomorrow into the close. And that's going to be something that everybody should watch. So pay attention to that tomorrow morning and trade accordingly.
Well, Craig, so far has been a good start to the second quarter for precious metals and for the stocks too. So all those investors in this sector need to be excited and encouraged by these moves and understand they are still fairly early stage. So let's see what the follow through can continue to be. But boy, oh boy, this week just more confirmation of how strong the month of March was and how important, I guess, some of those closes at the end of last week were. Craig, thank you very much for your time. It's always a pleasure chatting with you. We will chat again in the next couple of weeks. I hope you have a great weekend.
You too, guys. Always fun to talk.